Hello, my name is Abby McCarthy, and I'm the Senior Vice President of Investment Affairs at REIT. Today we are going to talk about investing in REITs. A REIT, or Real Estate Investment Trust, is a real estate company that owns or finances income-producing real estate. REITs help house the U.S. economy by providing much of the real estate where we live, work, shop, and spend our leisure time. REITs were authorized by Congress in 1960 to democratize commercial real estate investment, to provide investors of all sizes access to the competitive investment returns, portfolio diversification, and the strong dividends that real estate offers. REITs are an important component of the U.S. economy, with a total equity market capitalization of over $1.5 trillion. There are currently 220 publicly traded REITs in the United States, and 28 of those REITs are constituents of the S&P 500. REITs are in all 50 states and in more than 40 countries throughout the world. The REIT industry owns properties in 13 property sectors, including data centers, logistics facilities, apartments, self-storage, and retail, among others. There are 4 different types of REITs: equity REITs, mortgage REITs, public non-listed REITs, and private REITs. Today, we are going to focus on equity REITs. It is a widely accepted view in the investment community that in addition to stocks, bonds, and cash, commercial real estate is a core asset class with unique investment attributes and return drivers. Well-diversified investment portfolios should include meaningful allocations to all core asset classes, comprising the market basket available to investors. This includes commercial real estate, which currently represents 14% of the U.S. investment market basket. REITs are a low-cost, effective, and liquid means of investing in the commercial real estate asset class, allowing you to build a diversified portfolio that covers the entire investment market. The real estate market is the primary driver of REIT returns. Therefore, REITs may be used as a liquid proxy for gaining access to the entire asset class. REITs are total return investments. They typically provide high dividends plus the potential for moderate, long-term capital appreciation. Long-term total returns of REIT stocks tend to be similar to those of value stocks and more than the returns of lower-risk bonds. Because of the strong dividend income REITs provide, they are an important investment both for retirement savers and for retirees who require a continuing income stream to meet their living expenses. REIT dividends are substantial because they are required to distribute at least 90% of their taxable income to their shareholders annually. Their dividends are fueled by the stable stream of contractual rents paid by the tenants of their properties. The relatively low correlation of listed REIT stock returns with the returns of other equities and fixed income investments also makes REITs a good portfolio diversifier. REIT returns tend to zig when those of other investments sag, helping to reduce a portfolio's overall volatility and improve its return for a given level of risk. An analysis by Morningstar illustrates the diversification benefits of REITs. By adding 10% and 20% of REITs to a portfolio of stock, bonds, and cash, an investor can increase their portfolio return while keeping risk constant. REITs also provide geographic and property type diversification for investors. REITs currently own over 516,000 structures with a gross asset value of $2 trillion. So now you may be asking yourself, what is an appropriate allocation to REITs? The answer will vary based on each investor's goals, risk tolerance, and investment horizon. But multiple studies by leading investment research firms have found that the optimal REIT portfolio allocation may be between 5 and 15%. So if you are interested in investing in REITs, you can buy shares in a REIT, which are listed on major stock exchanges just like any other public stocks. Or you can purchase shares in a REIT mutual fund or exchange-traded funds, or ETFs. In fact, approximately 145 million Americans live in households invested in real estate through REITs, many accessing them through mutual funds and ETFs in their 401ks, IRAs, the thrift savings plan, and pension plans. A broker, investment advisor, or financial planner can also help analyze an investor's financial objectives and recommend appropriate REIT investments. According to a 2020 Chatham Partners study, 83% of financial advisors recommend REITs to their clients. For more information on the research studies I referenced, please go to REIT.com/quickfacts. For more information on REITs and REIT investing, please go to REIT.com. Thank you.